All right, it's time to get you more high limit business lines of credit. Look, if you're trying to get lines of credit to be able to start, fund, grow your business, and you're having a difficult time, you're not getting the rates you want, you're not getting enough approvals that you'd like to get, you're not even getting the amounts that you'd like to get. Well, we're going to fix all that right now during today's training. So by the end of this training, you're going to leave with a clear path of understanding how to access more high limit business lines of credit to be able to grow your business. We got a lot to cover, so let's dive in. Let's get started. So first of all, a lot of steps. We're going to cover these steps that you really need to focus on to get a line of credit. Let's start with the why. Why would you even want a line of credit? Well, lines of credit are the most popular type of financing that business owners ask for and request. And the reason for that, number one, is ultimately flexibility. When you have a line of credit, you could basically use it and pay it down. So this is way different than a loan. Loans are good if you know an intended purpose and you plan on putting those funds to use right away and getting a return. The minute you get a loan, your payment starts. So you got to use that money and get a return to start covering that debt outlay, that actual debt payment. But a line of credit you can get right now, even when you're not planning on using it, and have it sit there. You're not making payments. You're not paying interest unless you're actually using it. So this allows us an opportunity to get revolving credit, whether it be business credit cards or credit lines, have them available when we need them. Then when something comes up that's unexpected, like COVID, for example, we can shift our money from coming out of our bank account to the line of credit to buy us time to be able to make adjustments. We can use lines of credit to take advantage of amazing opportunities. We can use lines of credit to carry the business during downtimes or unexpected downturn where all of a sudden last month was a bad month, for example, and we didn't bring in as much revenue as we intended on bringing in. So there's just a lot of purposes you can use lines of credit for, but most importantly, lines of credit give you flexibility. They let you use them, reuse them, not accrue interest in payments when you actually don't need them. Now, you're here more than likely because you already know you need a line of credit. The question becomes, how do you get them? So first one, you need to set up your business where it's credible. I'm not here to talk to you about all this today. There's a lot involved with Fundable Foundation. So you need to go and actually, I'll pull up a quick guide for you that will break down everything you need to know about setting up your business where it is actually credible. Okay, right here, there's a Fundability MiniCourse, 100% free. This mini course walks you through everything you need to know about credibility, or as lenders refer to it, fundability, to actually look legitimate, to look credible to actual lenders. It's step number one. Look, this is where most people get stuck. The majority of applications that are denied, like well over 60% of all denials, happen right here because you're just not credible. You're not fundable. You don't look legitimate in a lender's eyes. You don't pass their sniff test. You don't pass their basically AI and their technology looking to validate your business. You're not passing that test. And that's sad and crazy because it's easy to fix. Like once you know that this is the problem and you fix it, we have so many clients that immediately start getting approvals. I mean, I can tell you, I can just give you probably 100+ case studies of somebody that came in and said, I got denied here, I got denied here, I got denied here. We fixed fundability. They went back and got approved, the same sources they got denied. It puts so many of our clients in shock because they turned denials to approvals because they fixed this step. So check it out. It's at creditsuite.com/foundation. That is our basic mini course. And our mini course will be able to walk you through everything you need to know to accomplish step one, which is set your business up where it's credible. And by the way, our RTs, thanks for coming in, saying hello. Mike South from St. Louis. I love it that you're here. Man, I love it you're here every time we're live. I think that's so cool. So the next thing is you want to improve your business credit profile. When you start looking at credit lines, lenders and credit issuers are really aggressively going to start looking at business credit quality here, okay? Because the better lenders that offer credit lines, like your big banks, like Chase, Bank of America, they're all making decisions taking your business credit quality into account. These major banks that give you the best terms and the highest approval amounts, they are using a small business FICO score, the SBFF. So that when we look at the small business finance score and we look at the small business FICO score, then what matters here is that business credit carries more weight than consumer credit into the overall score. So your business credit's going to be looked at here to start qualifying you for the best credit lines that are out there. So you, of course, want to make sure you're establishing business credit. You want to make sure you're monitoring business credit. You want to make sure you never stop building business credit. Getting approved for credit lines, loans, and especially credit cards, because credit cards are the easiest to get. Getting these that report to the Business Credit Reporting Agency should be something you're doing all the time. You should just ever be expanding that business credit profile and score, because that's going to be important for SBA loans down the road. It's also going to be very important for us to be able to get the credit line as well. So step one, we set up that fundable foundation. Step two, we start to build our business credit profile. If you need help along the way to do that, then I'll throw up a guide right now. This is a step-by-step business credit building guide. You can go to creditsuite.com/EIN or just scan this QR code, and this will bring you to a free resource that maps out the steps of building business credit. The next thing is you want to research to actually find the right lender for you. And so what I mean by that is that depending on your strengths, certain lenders are going to help you and certain lenders are going to be against you. See, back in 2008 prior, SBA accounted for like 90% of all lending that took place. And that was bad for us because SBA needed our personal credit to be good, business credit to be good, collateral. They need our personal financials and business financials to be good. We need to be showing profit and tax returns, all these things that a lot of us just didn't have to show. Well, now it's basically flipped, where about 90% of all funding is coming from alternative lending sources, fintech lenders, and only 10% is really coming from SBA. Now, this is good for us because these alternative lenders will just look at a strength in our business, not the overall business. And the main three strengths they look at is our cash flow, or they look at our credit, or they look at our collateral. So we got to look at where our strength is. If our business isn't generating any cash flow, then we can't look at that strength. We want to stay away from lenders like On Deck, who are lending money based on cash flow. We want to stop going to Bank of America and Chase that want us to have revenue. If we don't have revenue, we can't be looking at lenders that primarily make their decision based on the stability of our revenue or cash flow. Now, the other C is credit. So maybe we have good personal credit. Well, if we have good personal credit, that opens up credit lines through a program, for example, called Credit Line Hybrid. And I'll scan the QR code here. You can go to creditsuite.com/CLH to also get the shortcut. It's all right on this image here. So Credit Line Hybrid is for startups, for example. And it's just looking at consumer credit quality. Could be yours, could be somebody else's. But they don't even look at revenue. So this is how the strength system works, is that if my strength is that I have good credit, or I have like a friend or family member that does, well, then I want to go get Credit Line Hybrid. I want to get credit lines based on just the good credit quality and nothing else. If my strength is cash flow, well, then I want to go into an On Deck or a revenue lending lender that's making the decision based on my cash flow being good. And the third alternative is collateral. Maybe I have something that I can actually pledge as collateral. So the most common here are stocks, bonds, 401ks, IRAs, or even inventory. So if I have any of this stuff, if I'm selling e-commerce stuff online, or if I have stocks, bonds, 401ks, or IRAs, or if I do, or a partner does, or a friend does, I can leverage all those to get really low interest rate credit lines based on that strength. Now, if we're good overall, good personal financials, good credit, good collateral, good cash flow, then we want to choose a bank that is one of the major banks. We want to choose like one of the national banks, Chase, Bank of America, Barclays, Regions, you get the idea. So the first aspect of choosing the right lender is to choose what your strength is. Once you know that, it's way easier to find the right lender because I know my strength is cash flow or collateral or credit. I know my strength, for example, is that I've got a 401k as collateral. Well, then it's real easy for me to go and type into Google 401k business lenders or come to Credit Suite. We can help you find the right one either way. It's easy to find the right lender when you start narrowing down your strengths, find the categories of lenders, cash flow, credit, or collateral. Then you can go and find and search based on that strength and find plenty of lenders that will actually help you. Okay. So now you got to keep in mind and to review where we are, right? First, you got to make sure that business is set up credible. And I'm going to pull up these resources again really quick for you to be able to do so. So the first aspect of setting up your business where it's credible is setting up your fundability. Here's a resource for a free Fundability MiniCourse that walks you through all of that. Scan the QR code to go to creditsuite.com/foundation. Now, the second thing is we want to start building that business credit as we talked about. Here's a business credit building guide. creditsuite.com/EIN, and this will map out the exact steps of building business credit. And the third step is we got to find the right lender. We've got to make sure that we are focusing on our strength, cash flow, credit, or collateral. We want to go to the big banks if we have all three. If not, we want to start doing a search based on that strength and finding the right lender. If your strength is good credit, you can go to Credit Line Hybrid using this QR code right here. Now, the next thing is let's look at factors that are actually going to affect our approval and our ability to get credit lines. First of all, we just have credit scores. When you start getting credit at the major banks like Bank of America, Chase, consumer credit being good is really a necessity. You need to start having 650, 680 FICO scores or higher. Even though SBA says you only need like a 620, they also say that you need to remove any blemishes on your credit report. Look, I've had people with 780 FICO scores get denied from SBA because they had a late payment on a major bank account, like a major account with like Bank of America, for example. So you need to work on improving your consumer credit. You need to work on establishing business credit. Okay, the better your consumer credit, the more established your business credit, the better chances you're going to get approved. The next thing is that most of these credit lines are going to look at your revenue. Sources like Blue Vine or Fundbox will actually get you money just because you have consistent revenue. They'll even plug right into your bank account and underwrite looking at the revenue in your bank account, and you'll get approved like within an hour in a lot of cases. So revenue and cash flow is something a lot of these lenders are going to look at. When it comes to credit lines, most lenders outside of Credit Line Hybrid are going to look at your revenue. They're going to look at your bank accounts. They're going to look at your tax returns. So you need to make sure that your revenue and cash flow reflect that you're doing business credibly, and make sure that you're doing good business, that you're not overdrawing your bank account, for example, that you don't have non-sufficient funds, that your revenue is not declining month after month. These are things that these revenue lenders are looking at. And by the way, our T's came in from Legacy Business Solutions, and we've got a Jader Yours. Franklin, my first Credit Suite live chat. I love that, man. Thanks for coming in from YouTube. Welcome, and thank you for joining us today. I appreciate you being here. So the next is we're looking at revenue and cash flow, right? They're going to look at bank accounts. They're going to look at tax returns. What they're looking for on bank statements is they want to see you have more money going in than going out. They want to see you have a positive balance at the end of the month. You're not negative, that you're not non-sufficient funds. You're not overdrawing the account, that you have a lot of different transactions coming in, and that you don't have like a large transaction here or there, maybe one or two a month like a real estate agent would. That's primarily what they're looking for: stability and good bank account management. When they ask you for tax returns and other kind of financials, they want to see growth. They want to see profits. They want to see your business is generating some profits. They want to see that your business is growing month after month. So any of these lenders that are looking at the cash flow side of things, that's ultimately what they're looking for. The next thing is time in business. We're looking at business history. So we want to see how long has your business actually been open. The longer the business has been open, the more valuable it is from a lender's perspective, the more likely they are to be able to lend you money. And the last thing is collateral. Do you have any collateral that will offset the lender's risk? Now, as we talked about already, you can get financing just because you have collateral. For no other reason, you're still able to get financing just because you have collateral. You're also able to get SBA loans and the best, longest term, lowest interest rate loans and the highest line amounts, highest line of credit amounts, just because you have some kind of collateral. So do a real assessment. What kind of collateral does your business have? Does it have inventory? Does it have real estate? Does it have equipment? Can you let your customers pay you over time, pay you on terms? If you do that, then that establishes an asset called account receivables. Look at the personal side. Do you have stocks? Do you have bonds? Do you have 401ks? Do you have IRAs? Do you have real estate? Do you have vehicles? Like, what do you have that you're willing to pledge as collateral? That gives lenders peace of mind. They feel better if there's something they could take back if you default. Plus, like, you have something to lose if you default as well. So if I'm pledging my car as collateral, well, then that means a lot to a lender, because if I default, they take my car, right? And that's not something I want to have happen. So I'm more likely to pay them and repay them because of that as a result. So if you're doing these things and you're improving the main factors that are going to actually help you get the credit lines you're looking for. So let's take a look here in summary. So let's make sure, if we want the highest line of credit, make it easy to get lines of credit for our business, we've got to set up our business where we're legitimate and credible. We've got to make sure we're building a business credit profile and score. We've got to choose the right lender based on those threes: cash flow, credit, or collateral. We also want to make sure that we're improving our personal credit and building our business credit, that we're managing our bank account responsibly, that we're growing the business, and that our tax returns and financials show that. We want to make sure that we keep the business open as long as possible and don't keep trying to open up all these different businesses and manage it. We want to have the longevity in our business. It goes a long way because lenders know that the longer our business is open, the more likely we are to pay them back, because the more likely we are to survive and thrive. And lastly, we want to have any kind of collateral we can think of. We want to pledge those things as collateral to make it easier for lenders to want to lend to us, to make us more attractive to lenders. And Anderson said, "You're doing a great job." Well spoken, Anderson, coming in from LinkedIn. Thank you very much for tuning in. So that's it for me. I don't want to make this longer than it needs to be. I gave you the condensed formula to make sure that you are able to come in and successfully get lines of credit for your business. Now, look, the reality is you may qualify for lines of credit right now. If you'd like to see if you can qualify for a credit line right now, just go right here. Scan this QR code or go to creditsuite.com/CLH. You fill in a few questions. Our finance team will call you directly, and our finance team will talk to you about all the financing you qualify for. Look, we work with every legitimate type of financing. We have access to over 1,000 lenders. I can't tell you, probably 70 to 90% of business owners that can get funding that come to us don't think they can. They're coming to us saying, "Like, what do I need to do to get funding?" We're like, "You qualify right now," and they're shocked and surprised. So if you want to see the money going into the 4th of July this week, you want to have something even more powerful than, or not even more powerful, but even on top of the greatness of our country to celebrate, then make sure you check it out, creditsuite.com/CLH, because you may be celebrating the fact that you're able to qualify for credit lines right now. And that link will actually take you to our finance team to figure out all the funding you can qualify for. So thank you very much for taking the time to tune in. I will not see you before the 4th. So have a happy 4th of July. Make sure you like and subscribe. And I look forward to seeing you on our next training. We're talking